Iron Condor option strategy is one of the safest, best, most profitable option strategies that you can use. And that's because you can make money in both directions. Whether the stock price moves up or down, you can still make money as long as it stays within a certain range. That's the key. You don't want it moving outside that range. So how do you know if a stock price is going to stay within a range? Well, you don't. But if it's already made a significantly big move, then it's likely going to stay within a range. In this video, I'm going to show you how to take advantage of a stock that's already made a significantly big price move by selling an Iron Condor. I'm going to show you step by step how to do this on the option trading platform. Before we get started, if you appreciate the time and effort that goes into making these videos, please hit the like and subscribe button down below. It really helps to get the video out to more people, and I really appreciate it, so thank you very much. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a link to a paid course if you want to get the most bang for your buck and dig into options a little bit deeper. Use the link below and open an account with Mumu. You can get 8.1% on your uninvested cash and up to 15 free stocks. 5 for a deposit of just $100, and if you deposit $1,000, you receive 10 more free stocks. You also get the free charting software that's great and I use every day. It's a zero commission option trading platform and brokerage. Okay guys, so I am going to first start off by, let's talk about what an Iron Condor is. I actually have an Iron Condor on in a few stocks right now. Let's see, I've got one on in Netflix. So if you look at Netflix, you can see I've got 2 Iron Condors on. But you're going to sell a put, and then you're going to buy a put for protection, and you're going to sell a call and then buy a call for protection. And you are profitable as long as it stays within the trading range. So let's take a look at a couple of trades that I am going to turn into Iron Condors next week on Monday when the market opens. So if we look at Amazon, we've got the short, so the -1 is the short put. The positive one is the long put. So you're selling a put and buying a put, and this is called a put credit spread. So this is 1/2 of an Iron Condor. So if we look at August, I like to go 30 to 45 days out. August 16th is a regular option chain, not the weeklies, and we have sold a 190. So we click on the bid to sell the 190 put, and then the ask to sell the 180 or to buy the 180 put. And this is in Amazon. And you can see the reason we're doing this, look at the big move up over the last year in Amazon, all the way up at 200. My target is like 200 for Amazon. So why not right now put on a call spread to make it an Iron Condor and profit on both sides? I think it's already moved up a lot. I don't know that it's going to keep going. And hey, it may drop, so that will reduce our risk as well. So right here, we've got the 190. This is at the 31 delta. So that gives us a 70% probability of profit. We profit as long as the stock goes up. Now, if we add a call spread, so I'm going to go out and add, we're $10 wide, so I'm going to go $10 wide on this side. I can go 215, 225 and collect $2. I'm still love Amazon long term, so I'm going to be even more conservative. I'm only going to collect $1.51. I'm going to go out to the 24 delta, so that gives us a 76. You subtract that from 1, 76% probability of profit. And this actually shows 79, but it's about 76 to 79. And we collect $1.51, which is really $151. Now, if we do this and then we go to the curve mode, look what that does. Now we've got a profit zone. I've even allowed a little more room to the upside because I went further out on the calls. So I'm going to collect another $151 as long as in the next 41 days it doesn't go above 225, which is way up there. Let's see. That would take a move up to here. So it'd have to go boom to boom in the next 41 days. So I'm going to go ahead and put that on. I'm going to put it above the market to see where the market opens on Monday. We'll put it at $3. We're going to get about 151. Then I'm going to go good till canceled. So this will stay there until we cancel. And I'll just go ahead and hit send, and that is set up for Monday, and then I'll adjust it to the 151. All right, so that's Amazon. Let me know if you have any questions on that. But a Iron Condor is the combination of a put credit spread and a call credit spread. And let's look at Google. Google, same sort of situation. I'm long Google, actually up to 200, but it's at 190 right now. So I'm thinking it's already moved up quite a bit. Now is the perfect time. Look at that big move up. So I can put on something up in this range and collect additional premium because it's already had that big move up. They do have earnings coming out 7/23, so we got to be careful. But again, I don't know that it's going to skyrocket a lot higher, and this is probably going to, well, it's definitely going to reduce risk, and it's going to allow you to make more money and profit on both sides of the trade. So so when we look at the curve mode, we've got the same situation: short put at 180 and long put for protection at 170. So what that does is it caps your max loss on the downside, but we're also going to reduce this by adding the call side. So let's go there, August 16th. Let's do the similar thing. Let's add 210, 220 to make it $10 wide. We can collect 121. Wow, on this one I might even try to collect a little bit more. 184 if we go 205. Let's see where that is again. That takes us way up here. Wow. 205, that would take a $15 move, and stocks are already up. So I'm actually 184 versus 121. Yeah, I'm going to go, and this is the 76, it's got a 76% probability of profit, 78 here. $10 wide, 184. I'm going to go with this strike. Let me know what you're doing. I'm going to up it, stay above the market, and good till canceled. Review and send. And then that, once that's placed, we'll put our profit zone between this area. So we'll make it a range again. Actually, let me show you that. So if we go to the table and then we go to the 205, 215. Now we go to the curve mode. You can see what it does. It gives us that range. So we're at 190. We're in the profit range. Break evens 210 and 175. So we're good from here all the way up to here. Huge range within the next 41 days. So that's what we're going to look to do. Again, I'm just going to put 284 and then good till canceled, place it. And that's how you turn the put credit spreads into an Iron Condor. And I like to do that after a big move up or down in the stock, because for the reason it moved up or down is the reason that it probably won't go back the opposite way right away. It may stay in that range for a while, and because it already made the big move, it's probably not going to make an even bigger move. So I've had good luck with trading these Iron Condors. So let me know your thoughts. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Mumu. Get your free stocks. Leave a comment. Ask a question. I answer every one. Thanks for watching. I'll see you in the next video.